Hi, good afternoon, traders. We are now on the 17th of April 2022. This is a Sunday afternoon, 6 minutes past 12 noon. Indian equity markets were shut on Thursdays and Fridays. So I just thought that we'll create the weekly view and what can we expect going forward next week over the weekend. So looking at this Nifty daily chart, it was a little disappointing. All the 3 days last week were negative, and this short-term 3-day correction, which was showing some signs of bounce back, actually negated and fell for another 3 days. From a high to low basis, this correction as of now is around 4%. 4% corrections, short-term correction to be defined within that parameter. No particular change in the underlying trend of the Nifty. We are looking at the Nifty near month futures. This is the daily chart, by the way. But yes, definite drop of momentum is very, very clear on my charts. And short-term indicators definitely have found themselves in the oversold territory. What we have to now deal with is the erstwhile consolidation, which led to this breakout. And classic technical analysis states, and we've seen this time and again, that when you have a proper well-defined support or resistance, in this case it was resistance, and once that resistance is taken care of, as it falls, it should give us the role of support. So two things can happen. Either it will act as a support or it will fail to act as a support. If it's the first case, if it acts as a source of support, then the first thing that you should look at is the index trying to make a higher high, higher low on a day-on-day basis. So the bare minimum movement on the upside is it needs to go above Wednesday's high, and the next day's low should ideally be above the previous day's low. If that starts to shape up, then we can say yes, this erstwhile resistance has started to provide some support. If that does not happen and the index continues to drop further down, then of course that won't work, and the 4% downtrend will be looking to extend further on the downside, and what we will definitely get is a lot of volatility back in the market. This was the first leg of the bounce back. This was more like a consolidation of the bounce back. It did not give away anything, and this was the emergence of fresh buying. The emergence of fresh buying post that this correction as of now, right where we are, where resistances should act as support. This is, I think, should be the max from the long perspective. From a bullish perspective, this is it. Anything more than that and the volatility will be back in the market. There'll be indecisiveness in terms of the short-term trend of the market, and so on and so forth. But if the index has to hold on to this recent positivity that it has managed, and if it wants to scale further up, then it needs to bounce back from here on. It should not give away 17,500, 17,400 that easily. Now, as I'm recording this, last week's close was 17,500, and a look at SGX was closed at 17,300. So it's 200 points below the last close. We will see how the SGX opens tomorrow morning, flat or higher or lower, and accordingly I think the index will adjust itself in tomorrow's opening trade. So far, in terms of price, I think this Thursday, Friday's holiday been kind to the bulls. I feel so, or else we would have been marginally lower than where we are right now. Will we open lower or flattish or otherwise? That I think we'll get clarity tomorrow morning. BankNifty, on the other hand, is still stuck in this range. It's very much in this range that we've been talking about. You'll rarely find this kind of a consolidation, this kind of a tight consolidation. Bank Nifties do, go in a range-bound phase, which was the last time it did was somewhere here. But you notice that the width of the range, and look at the width of the range now. The tightness of the range over the last 5 days is quite rare. Brace yourself, prepare yourself for a big move from this breakout. Especially this move is going to come from the private sector banks, because the private sector banks clearly mirrors the Bank Nifty's last 5 days performance, and so The Bank Nifty is in a make or break kind of a state, and 38,100 on the upside and 37,400 on the downside is going to give us that directional clarity. Underlying trend is still very much positive. The lack of momentum is the one which is dragging the index down. So we need to take a look at how it plays out, whether we see a breakout in line with the underlying trend of the market or not. I always try to, have faith that the breakout generally happens in line with the underlying trend. So fingers crossed, we'll keep an eye on HDFC Bank, Kotak Bank and ICICI Bank for sure. So Nifty is at supports, Bank Nifty is make or break. Small and mid caps which were outperforming are kind of slowed down. In both the indices, you will start to notice signs of negative divergences with the short-term momentum indicators. So markets are in a stage where I would say it's crucial and vulnerable. The problem may start to arise from talks from, let's say, from the perspective of crude back to above $100. So it's at almost $107, 3-day bounce back from 93 to 106.95, 107 would start to be a little disturbing. What it has done pretty well is it has established a beautiful support for itself, little below that 95 mark. So any kind of follow through sell-off below 95 and the energy will stay well subdued. On the other hand, I think it will try and scale above 110, 115 in this move. If it manages to do that, then of course the talks of crude's impact will probably start to do the rounds. Going back to our sectors, most of the sectors are okay. Few of them are stretched, like the energy. Most of them you will notice definite signs of negative divergences, which means that they might slow down. Private sector banks, as I told you, Nifty Private Bank is on the verge of a make or break like the Nifty. FMCG is interesting. It is in an uptrend. It's holding well. ITC did phenomenal. There's one stock from this pack we would like to talk a little later now today. But that looks like a pack that can support along with healthcare and pharma. That also is a sector which is kind of consolidating. It's been consolidating for quite some time. It's moved into an uptrend recently, but it has not shown the kind of follow through. Will it? Maybe. Stocks like Sun Pharma and the others one can keep a close look at. But we did notice bullishness, within the market. Stock specific movements was there. And I think Hindustan Unilever is one stock that you can keep an eye on. Hind Copper is one stock that you can also keep a close look at, and I'll be also keeping a close look at HDFC Life, which is on the verge of a revival on the upside, maybe if we get a breakout movement. So stock specific bullish breakout, I think the markets will offer us, and from a short-term trading perspective, I think one should go for them. On the other hand, I think if 17,400 is compromised on a closing basis, then yes, it's going to get a little tough. This phase of the market was not that easy to participate on the long side, but from here on till this, I think the market flushed us with many opportunities. So now we will be probably by the close of next week, we'll have enough clarity on this, that strategically how we should place ourselves. Observe the first few 15 to 30 minutes of opening in tomorrow's trade, and see how it opens, how it sustains, how did the large cap, especially the private sector banks like HDFC open, and how it behaves, whether it sustains or not. And accordingly, you can, strategize yourself for the rest of the day as well as the rest of the week. All right. Hope you've enjoyed this extended weekend with your friends and family, and it was quite a nice break. So reset yourself and come afresh next week's trade. So take care of yourselves, trade well, and definitely trade wise.